Hello and good day, everyone. I am Fakrizzaki Ghazali, Head of Fixed Income Strategy at RHB Group. In this podcast, I will be talking about why should we consider investing in Malaysia government bonds. Geopolitical tensions in Ukraine continue to escalate, and rising commodities led to volatile equity markets and other risk assets. Hence, it is good to revisit our asset allocation strategy by looking into Malaysian government bonds, which comprise of Malaysia Government Securities or MGS and Malaysia Government Investment Issue or MGII, which is the Sharia compliant securities or Sukuk. Since the beginning of 4Q21, MGS bond yields have been trended upwards due to the US Fed signals to the end of the easy monetary policy from tapering and potential rates normalization in 2022. As a result, we view this as an opportunity to consider MGS as a safe investment amid rising volatility in other risky assets. MGS bond yields have moved past the pre-pandemic level, well ahead of the OPR hike expectation, which is attractive from relative value perspective, in our opinion. For example, the MGS 5-year is paying about 3.3% or around 1.45% higher than the 12 months FD rate, while the MGS 10-year is yielding 3.65% or 175 bips higher than the cash rate. We view MGS bonds as suitable option for income investors with low risk tolerance due to the fact that the government bonds are classified as low risk assets similar to the money market funds and fixed deposits. Hence, MGS bonds does provide a combination of better risk-reward propositions for the investors. Malaysia continued to keep the investment grade for its sovereign rating at A3 by Moody's, A- by S&P, and BBB+ by Fitch. The rating is well supported by Malaysia's diversified economy and strong external position, together with flexibility in monetary policy and solid growth prospects in the medium term. Nonetheless, the balance of risk derived from growing public debts, delay in the revenue-enhancing fiscal reforms arising from political uncertainties, which has affecting the government's policy priorities so far. Ringgit government bond is a component of global bond indices such as JP Morgan Government Bond Index for emerging market and FTSE Russell World Government Bond Index, which attracts investors from all over the world. Majority of foreign investors are consisting of asset managers, central banks and pension funds, as well as financial institutions. As a result, total foreign holdings grew by 15.7% year-on-year in 2021 to 234 billion ringgit from 9.3% growth in 2020. Foreign investors continue to add about 4.28 billion ringgit into their position in January 2022 at the back of rising volatility in other risky assets. Ringgit government bonds are largely owned by institutional investors such as banking and financial institutions, pension funds, and foreign investors which hold more than 90% of total bond outstanding. After understanding the key benefits of investing in the ringgit government bonds, we can summarize the merits as follows. First, MGS provides an attractive yield pickup relative to other low-risk assets. Second, the investment is suitable for income-seeking investors with low risk tolerance. Third, we expect Malaysia sovereign to maintain its status as an investment grade by the international rating agencies, hence maintaining the credit quality. Fourth, strong inflows from foreign investors are expected from strategic positioning. And finally, solid investors profile consisting of banking and financial institutions and pension funds provides a structural demand for the bonds. Thank you for listening to the podcast. Have a good day, stay safe, and stay healthy.